This is my $85,000 portfolio at 22 years old. It's been a rough month, down 7%. Not as bad as last month, but could have wanted better. I'm going to make this video very brief because I don't think much has changed since my last conversation. The biggest major change is it used to be that my biggest holding was Bitcoin, and the second biggest holding was my Bitcoin ETF, FBTC. However, this month I sold that ETF and I started moving it into a combination of MicroStrategy, Coinbase, Cypher, and a little bit of gold as well in the form of Fizz. Now, why did I make that move? Well, I think we're nearing the bottom for Bitcoin. However, we have yet to enter this shift to green MACD on the weekly candles. So I wouldn't say that the next move up is starting now, but I do think that it's not going to get much worse than what we saw around here, around 84K. And so if this is at the bottom of Bitcoin, what I want to do is gain alpha to Bitcoin going up. Now, in the past, what you would do is you would buy all the coins. You would buy Ethereum, you would buy Solana, and as Bitcoin went up, they would go up more. However, I do not have the confidence in these altcoins or their utility or any sort of speculation that could occur around them to go into them with any sort of size. So how do you bet? How do you gain alpha on Bitcoin's move? I think the answer is two stocks. One is MicroStrategy, which has been beaten down horrendously in the past year, and another is Coinbase, and I'll explain why for both. First, starting off with MicroStrategy, you can see here that the market cap is 45 billion, and they hold where is it? About almost $61 billion of Bitcoin. So the market is so bearish on MicroStrategy, it's valuing the entire company as being worth less than the actual Bitcoin they hold. I think that's incorrect. MicroStrategy has been around for a while. Michael Saylor knows what he's doing. He's got plenty of US dollars to pay off the dividends that he's incurred. And he's got a huge stash of Bitcoin. He's not going to blow up anytime soon. And so if that's the case, then I think that we're nearing the bottom for MicroStrategy, somewhere between 157, our current level, and I guess we could go lower to 113, but I don't see it much lower than that. And it looks very oversold, and this kind of discrepancy, I think, is not correct. $45 billion market cap, $61 billion of Bitcoin. So I think MicroStrategy should generate significant alpha over Bitcoin in the coming maybe 2-3 years. Coinbase is also interesting because it benefits from the volume of crypto being traded instead of just benefiting from adoption of certain assets like Ethereum or Solana. With Ethereum or Solana, you need people to be buying in. With Coinbase, you benefit just from pure volume occurring. So if we see more attention shift back towards crypto, Coinbase should benefit as well. And that's why I like holding those two instead of just a pure Bitcoin ETF. And then gold is pretty obvious. I think we're in the middle of a decade-long bull run in gold. Where's my gold signal? Here we go. We're in the middle of a decade-long bull run in gold. We just recently had this little pullback, so it's not sitting at super overbought levels. And so I'm totally fine to begin slowly accumulating gold here if I don't know what else to do with cash. So the remaining cash that's in this portfolio, which is around 8%, will go into those three mainly: MicroStrategy, Coinbase, and gold. I'm also slowly increasing my Cypher holdings. Where is Cypher? Here we go, this big gray. Cypher is a former Bitcoin miner that is similar to Iron in that it's starting to do AI training deals. However, Iron is primarily focusing on cloud deals. So they're trying to buy up a ton of GPUs, own the entire stack from power to GPU, and then rent out those GPUs in cloud service deals, which does make a lot of money. However, you're left holding a ton of GPUs. And right now the market is somewhat skeptical of the value of these GPUs after a few years. I think the market's wrong. There was a recent All In podcast. Oh, here they are. There was a recent All In podcast episode. I think somewhere around, where was it? It was, yeah, here we go. This one.
For Michael to become.
There's a recent All In podcast where around the 8-minute mark here, there's a talk from these guys presented by A16Z, and they mentioned that their GPUs that they have, their 7-year-old GPUs are at full usage. So everyone's saying that the GPUs being bought today are going to be useless in 3 years, I think is wrong. If you look at the new GPUs that are coming out from NVIDIA, you can't just take them and shove them into existing data centers and then throw out your old GPUs. They take very specific specifications to work, like racks, like cooling, etc. And so I don't think that these new GPUs will be less valuable. However, you have to respect the market, and the market's been a little wary of Iron going with owning the GPUs as a route. What Cypher does is a little different. What they do is co-location deals. So they don't own the GPUs. Their tenant owns the GPUs, Amazon, FluidStack, etc. And so I like having exposure to both of these companies. They've never missed any deadlines on data center construction, unlike some other names we could talk about. And they have a huge power portfolio coming up into 2026, and they should be able to sign many more AI training deals. And so I think they're both very oversold, and I chose to increase my Cypher position as a result. So that's the biggest changes. Some of the things to look out for, I would say, especially with Iron, is there's a list here from Agrippa that's very good. You want to see that the company establishes a well-diversified customer mix. So, for example, they have a deal with Microsoft right now, a cloud service deal. I would like to see a cloud service deal with Google next, or Amazon. Anyone except OpenAI, really, because OpenAI is they got too many deals going on. They're looking a little sketchy. So we would like to have a diversified customer mix, hopefully of multiple hyperscalers. We would like to see them monetize their several gigawatt power portfolio relatively quickly. I don't want to be waiting till Q3 for a deal to be announced. We want a deal Q1, Q2 at the latest. We want to keep an eye on if they're sticking with 100% cloud or whether they do some co-location. I think either one could be fine. People seem to be wanting co-location right now just to get a mixture going and diversify a little bit. But I think it's also fine if Iron chooses to go for gold and go 100% cloud. I think either could work. Can they deliver the Horizon 1 to Horizon 4 data centers on time? Are their data centers future-proof? Iron tells us they are. They tell us that future NVIDIA GPUs should be able to slot right into the data centers they're building and retrofitting. We need to see if that's true. And then we also want to see how large is Iron's pipeline beyond what they've disclosed. The rumors are saying that there's several sites that Iron is very close to getting power agreements on. We have to see if that comes true. And then as far as going back to Bitcoin, there's this narrative that like longtime sellers are longtime holders are selling rather, old whales are selling. If you look at this chart, the number of whales is just shooting up right now. So the people that know what they're doing in Bitcoin, the people that have been around for a while, are coming back into the market. Now is not the time to abandon Bitcoin. Now is the time to double down, I believe. It is possible that we see no major movement in Bitcoin in 2026, which would be unfortunate. But it might be better if we just consolidate around this level long run. It might be healthier. At the end of the day, we have the most pro-crypto administration in the United States in power right now, ramming through bill after bill, legitimizing the industry, integrating it with traditional finance. And Bitcoin's lower than when they were elected. So that's absurd. That's wrong. And attention and currency will flow back towards this space eventually. Okay, that's all I have to say. I'll see you guys next month.